You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it is time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, the brand spanking new theoptionsinsider.com. Hope you guys have a chance to check out the new coat of paint up there. A lot of good stuff. Let us know what you like. Kick the tires and light the fires, as they say. We know you guys are not shy, so you let us know what you think. And, of course, it's from the aforementioned Options Insider Radio Network as well. Coming at you live here on Friday, the end of May 31st here, 1 p.m. Central, 2 p.m. Eastern, our usual time here for Volatility Views. And joining me to help me hold down this volatility fort this week, first off, let's go all the way out to the volatility mecca known as Princeton, New Jersey, where we are joined once again, holding down the MIAX hot seat with Shelly Brown, the executive vice president over there at MIAX Options. Shelly, welcome back to Volatility Views, sir.
Hey, Mark, glad to be back. How you doing today?
I'm doing great. A lot of fun things, a lot of vol popping off this week, so we have a lot of fun stuff to talk about, and I'm looking forward to that. We'll be joined in a little bit by good old Mr. Mark Sebastian from Carmen Line Capital by way of Option Pit as well. And joining me, I'm pleased to say, here in studio, we have two newcomers to the Vol Views crew. First off, Jimmy Heinz and also Brendan Carter. They're equity volatility traders over there at the Gelber Group. Gentlemen, welcome to Volatility Views.
Thank you for having us.
Thanks for having us.
There you go. I can hear both of you.
There we go.
Perfect. All right. I like it. All right, gentlemen, let's kick things off as we are wont to do whenever we have guests on the show. Let's dive into a little bit of the old volatility viewpoint.
It's time to welcome thought leaders from throughout the volatility trading world. It's time for Volatility Viewpoint.
All right, everybody. Welcome to Volatility Viewpoint. This is, of course, the portion of the show where we welcome on guests from throughout the world of volatility and proceed to pick their brains for the benefit of you, the listener. As we like to do with a lot of our first-timers, we give them a chance to give them a little bit of their background. Jimmy, you're kind of a cheat because you were already on with me a while ago at our shows down at the Navy Pier Trading Show, where we were talking about volatility and data science. So we can maybe have you do a quick intro, but we'll start actually with Brendan, because Brendan, this is indeed your first time on the network. Why don't you go ahead and give our audience a little bit of an overview of your background in the volatility space and what it is you do over there at Gelber Group.
Sure. I started in the volatility space in 2007 and have been in it for 12 years now.
At the babe in the woods in the vol.
Exactly. So, and at Gelber Group, we trade portfolio style, long, short, vol arb, book of single stocks with some indices. So we've been doing that. I've been at Gelber Group for just over 5 years. We've got a group of about 14 of us trading individual ledgers and some team accounts in that portfolio vol arb style, the traditional.
And Jimmy, give us a quick refresh too. You kind of mentioned, I encourage you listeners, go check out the episode I did with Jimmy and the folks over there at Data Robot, talking about data science in the volatility space. It certainly was something different. But Jimmy, if our listeners here missed that, catch us up really quickly, your background, what it is you do over there at Gelber Group.
Yeah, I started in the vol space actually in 2008, so I'm a younger version of Brendan. I started at KCM, which was a spin-off of a group at P6, and it's the same traditional portfolio style, vol arb. Went over to Gelber, I believe about 6 years ago, started with Brendan when we were kind of first in the infancy, and we've been doing that ever since. Recently, we've been doing a lot of data work that has kind of spawned off of the Feb of 18 VIX implosion, I guess you can call it.
VIX Ocalypse, you can call it anything.
Whatever it is.
Volmageddon.
Yeah, Volmageddon. So we realized we had a lot of data, and we wanted to do some more things with it. Data Robot was one thing that we vetted and signed a license with. And then we have excellent analysts within our group that also have been doing a lot of data work, and we've that's kind of was the this talk that we had at the trading show, and so I'm kind of more focused on that now than trading.
And when people think, obviously, of a volatility trading group, they probably think of maybe some of the old school notions pop to their brain of, you have guys in the VIX crowd or you have guys in the SPX crowd. You guys are a little bit different over there at Gelber, right? You're not out there standing out there making markets. What is it exactly you guys do?
Yeah, so everything is electronic for what we do. Actually, nobody in our group has any pit experience at all.
Not anymore.
I'll be hanging up on both of you right now.
I apologize. We missed the whole pit era, which does kind of make me sad. We joined a little bit too late to the crowd. So we have, we're at Gelber's a large office of a multi-asset class firm. So we're one of the subsets of the products that they have. So equity volatility is our specialty, and we sit among each other and really help each other navigate this vol world. Like we said before, it's single stock focused, mostly the liquid names, and just looking for discrepancies and convergence among those names.
So you're out there taking markets really more than out there making markets and standing on the quote.
Correct. We are market takers in the very traditional sense, where for us it's mostly about creating a game plan of what you'd like to implement and finding the timing to put that on. So we have the mostly luxury, but sometimes it turns into there's pros and cons with it, but having the luxury of trading when we want versus trading when we have to, which can be mostly good, but sometimes if there's nothing to do, there's nothing to do.
That was the dream. You're standing out there in the crowd quoting, you're like, man, I wish I could get away from this nonsense paper and get on the good stuff. Right? So
exactly.
You guys are, in many senses, are living the dream. But Jimmy, you kind of alluded to earlier something interesting I want to dig into a little bit here, which is, I mentioned you guys kind of do the data science stuff, and it is fascinating, and we're seeing more of that being turned around and applied to the volatility space all the time. It sounds like you guys have really been digging in on the VIX Ocalypse front, the Feb 8, of course, the big implosion or explosion and then implosion of a lot of volatility-related products as a result. Do you have any interesting nuggets, any interesting findings you could share with our audience so far from the different analysis you guys have done of that event, maybe the lead up, the event itself, and then some of the aftermath?
Well, I think that we've, after the VIXopolis or VIX apocalypse, whatever we want to call it, we realized we had a lot of data, and we've accumulated a lot of data over the years, whether it's P&L data or market data, and we wanted to utilize it more. And I think what that's allowed us to do is gain a much clearer picture of what's under the hood in the market, and I think that starts in the SPX options pit, and we've been able to I think uncover some pretty cool stuff, mostly open interest related. And then on the single name side, we've done a lot of work, studying the intricacies of each individual name. It's not a cheap and expensive game as much as it used to be. It's not, where's the market relative to my historical blend of vols. It's much more nuanced than that, and really the only way to uncover that is to do the data work. And so we found ways to access and not manipulate, but maneuver data so that it helps our strategy and build out other parts of our strategy. Really,
exactly. So open interest, you mean like you just find liquidity aggregating around certain strikes? Is that what you saw, or what was it about open interest that was so interesting?
I would say that our contention is that there's pockets of open interest where high volatility and low volatility will occur one way or the other, and I think it's a product of market maker positioning.
And I'm curious for both of you. You kind of been on the market taker side, which is an enviable side to be on of late. But I'm curious. We've seen multiple volatility regimes come and go the past few years. Everyone thought when this new administration came into office in 2017, I didn't have a single guest on our network coming into that predicted lower volatility. Everyone predicted higher volatility. And guess what? We were all wrong for all of 2017. There was,
except for like the first 3 minutes.
Right, exactly. Except for a little bit there.
Right.
Other than that, it was pretty much no volatility to be found. And then, of course, at the event you mentioned, 2018, February, the vol came roaring back to life. Then things calmed down a little bit. Then October happened. More vol came roaring in. So it was kind of a tale of multiple cities. And then, of course, we have this year where the trade war, it's on again, it's off again, then it's on again. Or a day like today where it's expanded to different countries. And so it's been an interesting couple of years from a vol perspective. Maybe walk us through that from like a 10,000-foot perspective on you guys. You guys are out there kind of picking your shots. What has it been like? What was it like in the desert times of 2017 when there wasn't a lot of vol to be found? Maybe 2018 when it came roaring back to life, maybe a little bit too fast. And then of course, this environment we find ourselves in now where we're kind of getting the ebb and flow sometimes in the same day.
Yeah, I mean, we actually started even earlier than that. I mean, what our trade began as was this very traditional, as Jimmy alluded to, this cheap versus expensive mean reversion trade. And that was exactly what it was for, I'd say, up until even 2013 or 14. And then the trend sort of shifted in terms of you can't just buy Coke and sell Pepsi anymore and just think you're going to make money. So you had to figure out creative new ways to do that. And I've been impressed with us in the way that we've been able to turn our trade over several times, even from the 5 years we've been at Gelber Group, going from a very traditional long versus short versus you can trade vol in a trend basis, which was a pretty radical way of doing it. We kind of began that in 2016 where vols would come in, stay low for months. So had you been buying the way down, you would just get killed. So we've been able to change the way that we structure and the way that we find ideas based on certain market conditions as the years have changed. Now, 2017, the interesting thing for us was because 2017 was so predictable in terms of today's slow, tomorrow will be slow, made it easier for us to make decisions. As you got into Volmageddon in February 2018, that began the whole tomorrow's a lot less predictable than it was today. So what are you going to change for that? So then we've gotten into more of like, we call it like the fade trade where, okay, if the VIX is going to oscillate somewhere between 14 and 20, well, then you can buy low, sell high. But if it gets too low, you actually want to be selling again. If it gets too high, you want to be buying again. So it's a really delicate balance for us. So that's where we try to exploit a lot of, what are the types of names that are more likely to come in after vols have gone up, and what are the names that are likely to go down, and vice versa. So for us, it's been a little bit more of a, specific name versus name, getting to know names for a long time, trading Netflix forever, getting to see how that ebbs and flows. How's the term structure change? How should SKU be priced? What events they have coming up? So we've specialized a lot more in the specific names, and we've cast a less wide net. 7-8 years ago, you'd have a portfolio of 400 symbols. Today, it could be 45. So that's been a big change for us.
The universe of stocks that are
correct,
or products really that are worth your time have certainly curtailed. We see that every year. I just had Henry Schwartz on the Options Industry Conference a few weeks ago, and he talks about how every year he always has a chart of how many names comprise half of overall industry volume, and it's usually always trending down. So I always joke it's the most depressing chart of the year. This year actually was up, which is nice, but it's usually somewhere around 20, 25 names do half of all the volume. So in that universe, it makes sense why you guys would focus on the ones that are going to give you the biggest and literal bang for your buck in that sense. I want to get your thoughts on what's going on now too, but that means it's time for us to keep on rolling into our volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review. This is, of course, the portion of the show where we break down what the heck is going on from a vol trading and trending and analysis and unusual activity and all those other fun perspectives. And coming into showtime here, where, we were planning coming in today to talk, the vol that came and went, because that was most of the story for the week. It came in the beginning of the week, and then it kind of lessened. We've all been doing this trade war dance for the better part of the last month and change or so. And so today is a day where the trade war is on again. The vol premium is on again. I guess we decided today that China wasn't enough. Let's expand the fronts to include Mexico. Mexico not liking that, pushing back a little bit. And as a result, markets are off roughly looks like 1% pretty much across the board, close to it depending on which index you're looking at. And of course, yield, VIX Cash, and spikes taking a little bit of a swing to the upside. Spikes at around 18.5 right now. VIX Cash at a similar level, right around 18.40. So let's start there. Shelly, it's been an interesting, tumultuous week or so since the last time you and I chatted. Catch us up. What's lighting up your tape over there? I know you got some interesting data. We can get to all of that in a little bit as well.
Yeah, it's been an interesting week. Obviously, I'm on the outside looking in at the markets, but it's been an interesting week. Volumes have been good. We did see some spike volume early this week. We had a couple of our market makers dramatically tighten their quotes up early in the week. That brought some volume in. They've since widened back out, but it's a sign of things to come in the future. But there's been a ton of interest. We've had several institutions come to us in the last 2 weeks. They've had to change their charter to allow them to trade products other than VIX. They're going to start trading spike. We anticipate to see some of that in the next couple of weeks. And we're very excited going forward. Plus, obviously, with this volatility, a lot more interested in there's a lot more interest in the volatility space in general.
Yeah, it was a good week to maybe experiment with those markets a little bit, Shelly. We'll get to all your findings, I think, in a little bit, because I'm looking at it here, and it's pretty interesting stuff. We are also joined by good old Mr. Greasy Meatball, Mr. Mark Sebastian, coming in from Carmen Line Capital by way of OptionPit.com. Mr. Greasy Meatball, sir, what was going on with your crazies out there in the pit chat? What were they trading up in the volatility space this week, sir? What was catching your eye as well?
Well, I mean, what is we continue to have these days where the market is down big and vol's just meh. We're at the low of the month. VIX is nowhere near the high of the month, right? It is a really odd. I mean, so yeah, we're at the low of the month by a decent amount right here, and the high for May for VIX was the 9th, right? It was the 9th when got over 20, and on the 9th the SPX was what? It was 28, close to 2870. So we're 120 points lower, and the VIX is $3 lower. There appears to be no demand for risk premium whatsoever, and people seem to be happy to let stocks die. We can't even hold futures in backwardation right now. The spike's kind of the same thing. If the spikes had a futures curve, it would be, which it will, right? It would be, spike over the front over the futures, but that's it, and barely, right? We've now moved a decent amount the last week, right? The realized volatility in the in SPY, I'll use SPY for our spike friends, right? Realized volatility is really picked up the last few days, and it's going to read above 15 on Monday, and yet here we are, really unable to get any lift in these indexes. It is it's hard to fathom. It's a little odd, but I don't know. I don't know what your take is, but and then all the paper I'm seeing is fading this. Every single piece of paper is call selling, put buying, put spread buying, 1x2 buying. It is everybody fade the vol.
That's been the case for a while, though, right? There hasn't been one single blip that we've seen that hasn't been, shall we say, faded aggressively. It's hard to argue with them. It's pretty much it's worked out mostly. It has kind of retreated, unless you add a third front here on the trade war side, maybe then it won't retreat. But it is, you're right, coming into showtime here. We're seeing again VIX Cash 18.5, so roughly around a little over 2 handles north of where we were last week. Our old friend the VVIX, right around 95, 94.5. That's about 2.5 points higher than where we were last week. And you're right, Mark, coming to showtime here. VIX Cash was obviously backward, but the futures themselves were not. The cash was about a 1/4 point premium to that front June contract, and then you're talking almost about, I don't know, it looks like it was about not even 1/8 of a point premium to go old school to the July future. So the curve, the cash is backward, but not so much. Are you guys, Jimmy and Brendan, you guys big watchers of the VIX futures curve? We've alluded to and kind of joked here, only really half jokingly, but joked here on the show many times that the answers to all of the volatility space, they can be found somewhere lurking in that VIX futures curve. And right now it is, I think some might say, almost eerily flat. Is that something you guys, when you're doing your data analysis, is that something you guys take into account?
We definitely take into account VIX levels, and certainly the VIX futures curve is something to take into account. I was looking at it today, and I was kind of like, I've never seen it so identically flat. I think that we're kind of in a period that I would call like a calm chaos. I think there's a number of reasons why premium is going to be, even when it comes in, it's still rich. And I think that's why people are fading moves in vol. I think there's not going to be a resolution to the China thing anytime soon. And I think that's because of the technology side of that whole predicament. Mm-hmm. I'm not sure how much of the Mexico thing is a deal. I think it might be a political play by Trump. But you also have the Fed put in there that's, everyone's pricing in that cut. And then you have kind of our economy is still top of the leaderboard. So there's negatives and there's positives. And I mean, on VIX at 18, that's a lot of movement per day if you're looking at standard deviations. And we've seen days where it's just dead. And if you own volatility on those days, it can get bloody.
Okay.
Yeah, the other joke we've always had here on the show is at the end of the day, if you're trading vol, you can't really escape basic math, right? And at the end of the day, a VIX level equates to a certain level of movement you need to have in the space. And if you're not delivering that, it has to come in, regardless of maybe what you think or what other shoes you may think may be lurking out there in the political landscape or in the macroeconomic landscape. You mentioned the Fed put. There's kind of like the Trump put you hear lurking out. All sorts of puts are lurking out there these days, which I guess maybe that's the Bulls like that story. But either way, it is kind of fascinating to watch. Looking at this curve, you're right. Right now, there's a market premium for SEP versus even DECE. You could roll the DECE and get paid for it if you're out there. And right now, looking at the futures at least. So yeah, these are interesting times. This is the VIX curve telling us we have no idea what the heck is happening. And you're right. Maybe you can argue that it is the net as a whole. It's all maybe a little bit rich, hovering around, looks like around that 18 and a half level. But still, in general, it's all flat at that range. So which part is rich, which part is cheap? I guess we'll find out once saner, cooler, calmer heads have prevailed. Let's move on to some of the trades we saw this week and some of the positioning. Shelley, we were just talking about it. It's been interesting. We were watching. You had a decent amount of OI for VIX Options coming through May. May expiration kind of went away. A lot of that OI rolled off the board. So we saw the OI kind of staying unched for a couple of weeks there. That was not the case this week. You were doing a little of experimenting over there. Walk us through exactly what you guys did and then some of the interesting results you guys saw.
Well, we as an exchange didn't do anything different. It was our members, but we had a couple of market makers tighten up their quotes, and there was several trades, probably our busiest day since we went live. I think each of the market makers involved in those trades have probably backed off since then. They want to analyze the results of their trades. Why did they trade against each other? What have they seen different than others? But each of them have shared with me they're experimenting. It's like the first game of a 7-game series. The teams are kind of feeling each other out a little bit, but we expect them to come back aggressively over the next couple of weeks as they continue to fine-tune their model. They're also all very excited about the future. We're working closely with our partners in MJEX and the CFTC to get the product certified and get the future up. We also filed a couple of fee filings today specifically for spikes. One will allow any market makers that aren't currently members here at MIAX to come in at a greatly reduced fee if they just want to trade spikes. And then we're also adding a maker incentive for those market makers that are making more aggressive prices. So there's a whole bunch of things going on that we're very excited about going forward.
Yeah, I'm looking here at the data here again. Courtesy of our friend, the Flow Master there, and Trade Alert there. He was pricing up and analyzing some of the results of this little experiment earlier this week. And you're right, the OI pretty much, just from their result, that little bit of tweaking, OI pretty much tripled. I'm looking here, the data I have here goes through Wednesday, so I don't have it through exactly today, but it looks like the OI is pretty much close to 3x what it was this time on the show last week. You guys also noticed some interesting stuff in the spreads there too, didn't you, Shelley?
No, we did. Yeah, Henry Schwartz put together some data for us. He's been monitoring these spikes closely along with the VIX, and we've been running about 2 to 3 times wider markets than the VIX. And then on Monday, we actually became much tighter than the VIX. Yeah, according to Henry's data, the average bid-ask spread in the VIX in the June monthlies on Monday was about 30 cents, and our average bid-ask spread was about 25 cents on that day. And that's the day we had those trades. So obviously, tighter markets brings more volume in. While we are a little tighter, our size is near the size in the VIX market. So for those large orders, we're not ready to support that yet. But I believe that our markets are going to tighten up a lot going forward as these market makers, as I said, continue to tune their models.
Yeah, we've always talked. Mr. Schwartz is not afraid to share data that he doesn't like, or it doesn't really live up to a narrative. So if he's sending us this stuff, it usually is interesting. I'm looking at the charts right now for the spreads, and you're right. Things did tighten up quite a bit, and that's sans future. So we're looking forward to seeing what happens here when the future is live. And I'll show you, I got a couple of market takers here in the studio with me. I'll have to twist their arms after the show about looking at a little bit of Spike's options out there. I think I can see their ears perking up over here. It's not a video show, but trust me, I can see their ears perking up here as we're talking. Let's move on to the land of all things VIX options. It was an interesting week. We were talking for a while there. ADV out there in VIX options land was kind of light, kind of anemic, particularly for this time of year. It wasn't really the depths of the doldrums of summer yet. That's usually when you see kind of the ADV drop off, and it was well under 500,000. Not so much these days. The back and forth, will they, won't they dance of the trade war of the last couple of weeks has catapulted that ADV, multiple 1+% moves in the S&P, giving us back over that 700,000 level. So a much more robust, much healthier level in terms of overall options. I have some interesting trades that went up earlier this week. But first, Mr. Sebastian, sir, what was catching your eye? You kind of alluded to some of it earlier. Any interesting trades coming across your tape this week that kind of caught your eye out there in VIX options land? Yeah,
again, lots of selling. So I want to run down kind of the trades that I've seen today. We saw a seller of the June 22 calls, another seller of the June 22 calls. The June 20 calls got sold. There was a buyer of the June 14-15 put 1x2, a buyer of the June 16-14 half 1x2, a buyer of the July 15 puts, a seller of the July 16 quarter strangle, July 15 put buyer, July 15-14 put spread buyer, June 14 puts paper customers have bought on the day. I mean, look at if you think guys don't think that we're going to see a fade here, look at the number one volume strike on the day in VIX is the June 14 puts trading between a nickel and a dime. So there seems to be pretty heavy action on some sort of vol collapse. It's been interesting, but yeah, they've traded over 36,000 of the June 14s today, and I find that interesting, kind of across the board. Outside of that, it's been what calls can I sell today, and that's why you've really had a lot of difficulty getting any real vol pop. I mean, VVIX is 97. There, everybody is fading the ball, and so you have to wonder. We're down. If we did not have that Mexico tweet, where would VIX be today? And my answer is, I think it would be near 14.
It would be exactly at my prediction. So they saw my prediction for the crystal ball, which we'll get to in a little bit. And they said, you know what? It's too perilously close. Let's juice it up with a little bit of Mexico action here.
The office.
It was all conspiring to confound our VIX predictions for the end of the show. Yeah, we saw some interesting action this week. You're right. It kind of has been mostly biased to the dark side here. Yesterday, the big trade going up in VIX options was the 15 puts going up nearly 40,000 times, splitting the uprights exactly for 60 cents, but it went up late. I'm gonna go out on a limb and say they probably were opening, actually not opening, but buying on those. Well, also July 23 calls, not the monthlies expiring on the 3rd, so out there in the weeklies going up 12,000 times. Looks like a little bit of premium harvesting up there, and AUG 15 puts were pretty active there as well, going up near the offer 10,000 times. So 15 puts. Pick your month. We're kind of the trade du jour. We also saw on Wednesday the big print out there was a size vertical. Maybe a bit of a roll here. I'll have to look here. Actually, no, neither of them were opening, so maybe not. Hard to tell. Oftentimes in VIX land, the OI is so sizable. But it was the June 14-16 vertical went up nearly 60,000 times, going up for looks like 63 cents here. Looks like they were lifting the offer at least on the 16 puts. So if it was indeed opening paper, it looks like probably buying this bad boy. If they could be rolling their shorts down. I'll have to dig into the OI a little bit there to find out for sure. Also in all puts though, saw some call verticals as well. The June 21-29 going up 11,000 times. Looks like for 70 cents here. Kind of again splitting the uprights. So maybe a little bit of the old premium harvesting here. And then of course Tuesday the big trade was the July 23 calls going up a dime off the offer there, nearly 20,000 times. So it does seem like that's the narrative, Mr. Sebastian, that people are taking advantage of every pop they get to kind of reload the gun and fire again. And maybe those folks out there who thought, that was certainly what we thought yesterday on Option Block, that the vol slide was back in. They got another chance to load up coming in today to the other product everyone loves to use. Before we get to that, I know you guys watch a little bit of VIX out here, even if you're not out there standing in the crowd making markets in VIX options out here, Jimmy and Brenda. You guys have some interesting, you guys are always analyzing VIX. Anything catching your eye out there in the options or in VIX in general of late?
Yeah, I mean, what we've seen, what Sebastian shared is coming to our market as well in terms of there's just no fear. So if vol pops, they sell it. They sell the calls, they sell puts, either way. And I think that's because, velocity is what breeds volatility. And this has been a really low velocity sell-off. So it's not really causing any panic. So people are using any roll down in spot to sell higher implied. So we've seen this spot down, vol down phenomenon since the sell-off began in May. It's been the same in our world as it's been in VIX. We've seen that too. And one interesting stat that we saw come across was that yesterday was the lowest VIX close ever for a 5% down SPX month. And it just goes back to this. We have gap downs and then they buy it intraday. So I think that really causes, that path is what causes people to just be like, you know what, we don't need this.
So you guys like to pick your spots. Have you guys been looking at selective, shall we say, harvesting of the risk premium out there in the index land, or is that not an area you guys are playing in right now?
We don't play the indexes quite as much. I mean, we've used those in the past more as like a portfolio band-aid, something you can go to pretty quickly if needed. And also, too, you can structure things very well to offset some short premium in some of our single stocks. So we typically don't trade as much index vol, mainly because it's so perfectly priced because there's so many eyeballs on it. So there's just not as much mispricing to exploit there. So we usually use that as a barometer where, it's pretty rare to have Amazon and QQQ vol so off that there's a pretty good arb there. So we use it more as a barometer for the global vols, that's the universe we look at.
Not as fun to exploit when all the eyeballs are on it.
Yeah, there's a lot of them.
We're definitely seeing some on the SPX side. Our indicators are showing there's going to be more realized volatility, like for a while. So I think that as the VIX goes up and down, I still think you're going to see larger than normal moves. But I do think that there's an interesting phenomenon where the VIX doesn't really spike, or VIX futures don't really spike anymore past 20, 22, 25. It's a very efficient market. And I think that that's also adds to the no fear concept. I think that there's enough people out there that want to fade the June 23 calls, as opposed to the fact where I traded VIX a little while ago. Those were the options everyone wanted to own. The 20 line, 23 line, those were the protection strikes. So, yeah, I think there's a little bit of an efficiency effect of. I mean, we just don't see like 30 VIX very often anymore. I mean that. Even in December, I don't know how high. I mean, it got up there, but that was kind of like a crazy.
Yeah, spot was up there, but you're right. I mean, futures were pretty benign through the sell-off, and you look back at moves in SPX and it was vicious, and VIX futures just wouldn't follow. It was strange.
Yeah, it has been kind of a fascinating phenomenon. I often joke here, what is that level? What is that take your ball and go home level where VIX is just too high and people want to, it actually hurts volume. And it depends on people's risk tolerance and how they view it. Some people will say 35, some will say 40, some will say 25. These days, you're right, though. That seems so far and so distant because we haven't hit even that 35 level in so long. It does maybe that level is much lower now. Maybe if we did all of a sudden go up to 25, people would say, whoa. This is crazy town, Vol. Let's get the heck out of Dodge for a little bit. So you're right. It has been fascinating to watch kind of the regime that we're in right now. Speaking of regimes, it doesn't sound like, at least according to all your data science there and analysis there, Jimmy, that you don't see a retracement back to, shall we say, the glory days of 5 and 6% realized volatility from 2017 anytime soon.
No, but you'll see days of 5 and 6 volatility, that's for sure. And that I think is what makes it a little bit difficult, because you're getting a little bit of a binary. Either the game's on and Trump's tweeting about Mexico, or nothing's happening, and either stocks will gap and then they'll sit. And then what are you going to do with long premium? I mean, besides hate yourself.
Besides get very angry and have your risk manager tap you on the shoulder and say, "Why are you paying so much decay today?" Speaking of decay, people like good old VXX because it easy for me to say. It usually predictably decays. These days, not so much. It's kind of following a similar trajectory to the rest of the vol space, where it was coming in, spiked up, was coming in, and then, of course, Mexico happened, and now we're back up. We're at about a 30.5 or so coming in, a little bit north of that right now, coming into the latter portion of the show. That puts us about 2.5 handles higher from where we were last week. I know that I often talk about that 30 line is that magical bellwether, that magical level everyone watches out there in VXX, and we're back north of it again. So maybe if you're one of those ones who likes to load up on the 30 puts or the 30 verticals out there in the put verticals in VXX, maybe this is the chance for you guys to refresh out there. Today's volume, not exactly lighting it up a ton, but once again, we saw last week puts were kind of dominating the top 10. Mr. Meatball, with anybody out there in your pitch chat, are they excited that we're back above 30 again? They get to reload. What are they up to out there in VXX land these days?
Yeah, VXX is definitely an interesting one. It continues to just kind of flop around and not do anything because the VIX futures aren't doing anything. I mean, I think we're right around the lows of the day, and vol is well off the highs, and VIX futures are well off the high. It just, I don't know. This is just, I was counting. I think I saw overnight, the gap overnight for the month of May, the close to open S&P 500 is down 7.5%. And the open to close market is actually up. And that's what's producing our down 6% on the month. Just really odd. The overnight risk is really the what's going on here, because you get some sort of craziness like, we're going to tariff Mexico in the middle of trying to close a free trade deal with Mexico.
Yeah,
that's like, volatility is dead. Long live volatility.
Exactly. Speaking of volatility, it's also to be found in the single names these days. We did see some interesting names popping off here this week. Wednesday, we had some of the big retailers, Dick's Sporting Goods, Abercrombie and Fitch, the latter portion there. Not looking too good, lighting it up to the downside there. Yesterday, we saw the first big announcement from Uber. And spoiler alert, they lost some money. Go figure. I think everyone saw that one coming. We saw Costco and Gap also after the bell. Dollar General and Dollar Tree. So unfortunately, Uncle Mike wasn't on. He loves those. He loves those dollar. He loves the whole dollar sector out there. We had Burlington Express before they opened today. We had Big Lots. Jimmy and Brenda, I know you guys play a lot in the single name side of the space. What's been catching your eye out there? What are some of the names you guys like to watch? And also, a lot of people like to watch the single name, at least from our audience, like to watch the single name universe around earnings season because it is so interesting from a volatility perspective, analyzing the straddles, making maybe some interesting analysis going into and coming out of the event. So walk us through, what are you guys watching right now, and what is earnings season? How does that change your analysis, if anything?
Sure. I mean, I'd say the most interesting report on paper this week was Uber, right? Where for our world, this was the first time that Uber with listed options was actually reporting earnings. So one interesting thing for us is, well, how do you price that, right? They've never reported earnings before, so how much should Uber move on earnings? They went out about 7%, and it kind of bricked because, Spoo's down, but Uber up kind of gets that pretty unched. But that was an interesting thing for us was, do you base it based on what Lyft did? When they filed their S1, they already gave numbers, so how much does that matter? So that was kind of I'd say newer stocks for us are much more interesting because there's going to be a lot more mispricing. A lot of people, basically guessing, and where we can kind of play that off.
I'm guessing for you guys, that was a moment where you were happy not to be on the quote, but maybe just be able to pick your opportunities there rather than having to go out there and actually make that straddle market.
Exactly. Quoting that was no piece of cake. It was in the lower sixes last week, went up to mid sevens this week. So. Yeah, I'd imagine quoting, you're getting stuff with some inventory that you might not really like. That's moving quite a bit on you. So outside of Uber, we saw a lot of retail, as you mentioned this week, mostly getting crushed. Which has been a pretty dominant theme. A lot of them got crushed even before earnings as well. So those are, that theme continues. That's not a sector we trade really heavily, but it's certainly a barometer for trade. That we've seen.
And do you guys turn it up more or less, or is earnings season more kind of you kind of step back a little bit because it's a little bit too crazy? That's where a lot of the retail likes to flock in. What is earnings season for you guys?
Earnings season's definitely an active season for us. It sort of disrupts the vol-arb landscape, but I think we've actually found a way to turn that into another strategic part of the year, or 4 parts of the year. And that comes from a lot of straddle data analysis and trying to figure out what's fair and where is there a place where we can kind of dip our toe and maybe find some free gamma somewhere. But yeah, I think there's a lot of opportunity during earnings, but it sure is a binary game.
Yeah, that is the danger of. That's why we always tend to counsel people maybe trade before it or after it. Through the event itself is really when that coin flip tends to happen. And even though a lot of our audience, they love it, that's why we put up a lot of these earnings straddle analysis courtesy of our friends over there at ORATS all the time, because you guys love the data. At the very least, the data has value, I think, to a lot of our audience, analyzing the performance previous quarters, subsequent quarters, how all that is being priced in right now. There's a lot of value in that analysis. Brandon, before we started the show, you were kind of talking a lot about the Widowmaker, Netflix, and kind of how that one's been. I'll take up a lot of your time. Is that where you're hanging your hat a lot these days, and how has that been? What's that been like going through earnings? That's always usually a pretty aggressive performer. I don't think this season, this quarter, really lit the doors off. Lit the doors up at all.
Yeah, it was kind of a dud this time around. What's nice about a name like Netflix for our purposes is like the dollar amounts of stocks matter because we trade less contracts. It's less fees for us. Not as great for the exchanges, but helps keep our costs down. So. Netflix is an interesting name where it's a little bit insulated from the tariff headlines. So, there's a little bit more predictability from, the overnight. You watch out for things like upgrades and downgrades. But what's been interesting with names like that, if you're a higher dollar, higher implied vol name, there's lots of vol. So that's where for us it becomes really interesting. There's lots of volume, retail paper, 1 month vol can fluctuate from a 32 to a 39 in a week. That's a really tradable range for us, much more interesting than like a Sherwin-Williams, which is just not really going to do anything for you. So
are you saying paint isn't sexy?
It's just not as volatile as online streaming. And so that's what anything for us that has volume, vol, typically higher dollar, and he's more of a retail following. That's how things can get. That's where that misprice and the fear and greed comes from. Without that, there's not a whole lot to do for stocks that don't have it.
Vol, a lot of retail participation. You're talking Tesla right now. I've got to imagine you guys are pretty active out there. You pretty much described it to a T.
It was. I mean, Tesla was a really phenomenal trading vehicle. Tesla, below 200, gets a little bit of a binary feel to it. So if for guys like us who aren't too smart, we try to avoid anything that we can't price, that well. So something where is Tesla going to be in a month? We don't really know. So
we're probably the only two people that are neutral on Tesla that
yes,
are on Twitter.
That does not exist. If you put out anything about Tesla, the love and the hate comes in equal measure. It's pretty fascinating. It's like anything political, right? You get half the audience angry, half the audience loves you. Tesla, the exact same thing. Half the audience hates you, half the audience loves you. You're right. According to the OI out there in the options, June 50 puts are the biggest position in Tesla, right? So according to the options, it's going to be 50 by June expiration. So there you go.
I heard there was a 10 put trading.
10 puts trading for size.
Yeah. There was,
trading for size, and they have been. We've joked about it on our network many times. We were kind of the ones who kind of first uncovered what we call the Tesla mystery puts well over probably a couple of years ago now, where we saw the size open interest, the number one strike for every month was always these Jan 50 puts. This is going back a couple of years ago. So we started doing some digging and analysis, and everyone started running with it. It's become a fascinating point of contention. Now it's in June. They're also in Jan, and also the Jan 10 puts. You're right. I think they're probably, if I pulled it up right now, it'd probably be number 3 or 4 in the top 5 positions of Tesla would be the 10 puts. So obviously there's a lot of funds out there that are, playing in the credit. They're using the options to hedge. They're not just straight up coming out and saying they think the stock's going to be at 10, but still, it is interesting to see all the paper that's lining up out there as we go. Speaking of lining up, we have to keep on rolling, see how your questions are lining up with a little bit of your volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL, posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
A lot of laughing going on here in the studio here. That's why it's fun to have studio guests. Makes it hard to come back from the little breaks there. Welcome, of course, to the Vol voicemail. This is your portion of the show where you guys ask questions, comments. Lots of great questions coming in. I always like to bump up the live guys. We have Mark Brandt coming in again. This is 2 shows in a row now, saying he likes VXX upside risk reversal. It's rocking for him right now. Well, see, you're one of the folks out there who's leaning to the upside in VXX. Everyone always talks downside, but the open interest shows a lot of call action. Sounds like you've had a bullish risk reversal and it's working out pretty well for you. So well done there, sir. This one came in from a lot of people. I'll just pull this one from Cap Wulf. Obviously, if anyone's been paying attention to the volatility news space for a while, the big headlines outside of today's action with Mexico are, of course, the results of at least the VIX lawsuit getting tossed out. This question comes from Cap Wulf. A lot of people, like I said, have the same questions. It looks like the dark days of VIX are finally over. Thoughts on the outcome? Do you guys agree with the judge's decision? He includes a link to Reuters. A lot of you sent other articles. They're all pretty much the same, breaking down the judge's decision that effectively he said that there was effectively from the side of the SIBO at least no manipulation. He didn't dismiss it so they can never bring it back. So someone could bring this lawsuit again in the future, but they probably would have to make some tweets, make some updates. This has obviously been a contentious issue for over a year now. Mark, we talked about it on the show many times here in the past. I'm curious, your thoughts on the decision they reached, because it sounds like the judge pretty much came in line with what we said. Everyone knows there are issues with the way that settlement has worked. It's been going on for a long time. But I think the notion that, at least the lawsuit's alleging that the folks at the exchange were kind of laughing maniacally and pulling levers behind the scenes, that never really made a lot of sense. And that seems to be the way the judge came down. Do you agree?
Yeah, no. Although if the judge knew the research team at SIBO and how maniacal they are,
they do like to laugh maniacally.
Changed his tune. No, I'm kidding. Yeah, I always thought that lawsuit was silly. I thought really you want to go after the firms that are cheating, not the exchange. Maybe SIBO put some fixes in to try and fit and mess and not have this. But yeah, I never really was on board that it was that it was the SIBO's fault. It's trying to imagine anyone over there being maniacal is in and of itself, case in point of why they should not have been found guilty.
Shelly, you're in the exchange space. I know you have a healthy competition. Obviously, with the VIX, you want spikes to get out there, but also a healthy, synergy. You want to trade. You want to see some trade getting going between the two of them. Obviously, when you see people out there alleging things like an exchange involved in manipulation, it probably kind of rubs you the wrong way. So, what are your thoughts on the way this has wrapped up, at least for now?
It certainly rubbed us the wrong way. I mean, we as an exchange, or SIBO as an exchange, we give a facility for people to trade and people to make markets the way they make markets. So we always thought there was no basis to that suit. That being said, we did some things in spikes to try to minimize the opportunity. If somebody wanted to trade nefariously, it's going to be much harder to try to influence the opening at settlement because of the way we do our truncation. But that's besides the fact. It's not the exchange in this case. If there was something done wrong, go after those that did the wrong thing, not the facility that gave them the forum to do it.
Shelley, that lawsuit rubbed me the wrong way. Your words and encouragement on in my life rubbed me the right way. I want you to know that.
There you go. Family friendly. Going to lose our clean tag here in the iTunes store. We'll just keep rolling on there. There's a reason why we call them the Greasy Meatball listeners, and there's all sorts of reasons. Let's keep on rolling here. We got lots of questions. Let's see. Strangles and VXX, bullish, risk reversals. How about this? This is a fun one to wrap up on. Everyone, I think, can chime in on this one. This comes from Michael Paige. He wants to know, I've heard your discussions about inverse volatility products and how we probably won't see another one anytime soon. I find myself wondering how you could even construct one of those products in the modern era that would pass regulatory muster. All of them have an embedded function that they can effectively blow out any time. How can any provider offer this product without also having to carry so much upside protection that it becomes far too expensive to list? But I don't see regulators allowing anything past them that has an embedded, quote, acceleration event in their prospectus again. Yeah, I've joked about that before. The old, Brendan and Jimmy, the old prospectus for XIV that it had this, what they termed an acceleration event that it could effectively blow out at any time. And they had it in there. And that to me was always just I'd never seen that kind of wording in their prospectus before. I guess according to our listener, maybe we won't see it again. But we've talked before how challenging it would be in this environment to try to recreate a product like that for all the myriad reasons. I'm curious, do you guys agree with us and our listener here that he doesn't think we'll be seeing any XIV similar products in the near future? And also, you guys are out there on the taker side. If you wanted to see one of these products again, how would you even go about doing it that wouldn't have the same issue? Well, easy question to solve.
I would say the only thing I would disagree with was that there would be a competent regulator to actually determine whether or not this could be structured. But
well, their answer now everything is just no, so that's easy.
No, I mean, I think the inverse product for the VIX is useful because it takes kind of out the short gamma effect. I thought SVXY was a good product.
Yeah.
I didn't know that it had...
Until they neutered it, yes.
Yeah.
Exactly, yeah.
But I thought it was a good product for the retail player who wanted to own short volatility. I mean, I think that's something they should have the right to have. But, I mean, what do I know about the construction of it? Not much. So, I mean, I don't really have... too much else. No,
I mean, the only interesting thing that jumps out at me was, I remember Jimmy and I talking about this. This was like spring, summer 2017, this whole acceleration event of XIV and the notional short vega outstanding from these VIX ETFs was like widely talked about topic. And it was not really a matter of if, but when. And then it turned out to happen about 8 months later. So I do remember like the acceleration event does bring back some interesting memories.
It's quite a way of putting
memories. Fond memories for everyone.
For some, yeah.
Well, Shelly, you just kind of went through this dance with spikes and getting regulatory approval for a vol product. Any vol product, forget inverse alone these days is kind of challenging. I'm curious if you have any words of wisdom for our listener here, Michael. How do you think? Do you think someone could get one of these things approved without some sort of draconian measures like he mentions, or do you think it's just a bridge too far right now in the vol space to get a product like this even approved?
Thank you. the SEC was very scientific in how they worked with us. When we went in with our filing, the product is similar to the VIX in many ways. We had to show them in what way it's the same and what way it's different, and explain to them how we have designed the product so it's much more difficult to be manipulated, and it's very customer friendly, but it's not something new and novel per se. So while the SEC was very diligent in doing their work, they're also willing to let a new product come online if you can prove it's worthy of being a product in the marketplace today.
Yeah, interesting stuff out there. I want to get your thoughts, Mark, but also we just got another live question. I like to get live ones in, and it's for you guys. So I want to make sure before we wrap up, you guys get a little bit of love. This sounds it came in specifically for you, Brendan. So brace yourself. I don't know. Let's see what we got.
I probably
here.
know this guy.
Someone wrote in saying Alexander Argo. Maybe I don't know. Says Brendan sounds like he knows Tesla really well. What side of the vol do they like in there? You just kind of mentioned you're not liking the vol at all right now because it's kind of more of a binary event.
I mean, as you mentioned, the skew is so expensive, and it's such a dramatic stock on where you lie. So it's one where you can't buy downside. It's so expensive. It's hard to have short slides because you don't want to be exposed to gap risk. If you're long it, it's really pricey. You're going to get killed on decay. And you're not really sure, similar to Trump, what Elon Musk news could come out that could drive the stock to gap overnight. So it's a really tough, it's a great question, but it's really tough landing zone for a name like that for guys like us because there's so many what ifs. How do you price that? Could this happen? When guys in our world start asking too many questions like that, we usually kind of move on to the next symbol.
Yeah, it's one of those ones where it's too rich to buy, but you don't want to sell it.
Yeah.
You're in that weird kind of limbo. But I knew once you mentioned Tesla, they come out. So there you go. That's your first official question, just for you.
There you go. All right, we got one fan out there.
Jimmy's been on twice. He hasn't had a single question. I don't know what that says. We got to
get a publicist for him. Yeah.
Instead, we've got to keep on rolling into our final segment. It is time to humiliate all of us. It is time to go into the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball, the final portion of the show. Some may say the most difficult portion of the program. Certainly was today. It was all lining up perfectly. It was all looking pretty good. Last week, we had our guest Matt from Orats on. This is, of course, a portion of the show where we have to prognosticate VIX Cash and or spikes right around this time, 2 o'clock Central, the end of the show here, not the close. That makes it even more challenging. I was at about a 14.75 on the VIX Cash and around a 15 on the VIX. And Mr. Meatball, you did 14.10 for both. We were both looking fairly decent coming into today, and then Matt was actually farther on the downside. He was at 13 on the VIX and 13.25 on spikes. And spoiler alert, Mexico kind of ruined all of that. Coming into the end of the show here, we're seeing spikes still around an 18.5 and VIX Cash right at around a similar level there. So we're all many handles off, so we're well outside. Thank you, Mexico, is all I'm going to say for that one. We were close until we weren't. So that's a long way around to saying none of us here on the show won this week. So that opens the door here to our guests. I'm going to throw the opportunity over to them. It's a dubious honor, but an honor nonetheless. You get the opportunity to go first here. I'll let either you can do both make predictions. You can make one prediction for the two of you, whatever you like. We're looking for and you guys are cheating. You have the data science going, so maybe you have a little bit of insight here. But what are you guys feeling for this time next week, exactly a week from now, in VIX Cash and or spikes? Pick your poison.
Oof. Mark, I'm going to go with 14.99.
Oh, I was thinking like a
can't go over.
Can we do it like a Price is Right where I go like 15.1?
You can do whatever you want. We won't hold you to the Price is Right.
15.6 came to my head, so I'm going to go with that one.
Tell you what, I'll give you a range of 14.99 to 15. That's a pretty tight range. You guys are in simpatico. I thought you'd be a couple of handles apart.
We work at the SIBO.
Wow, yeah. You guys are.
We'll see where the Plinko chip falls.
You trade on a desk together. You're in sync when it comes to you're 7 cents away from each other.
Exactly.
Okay. That's a pretty tight market. I have to say I'm impressed. Usually I tell people for the first time their eyes widen out and they go crazy. All right, let's see who else was closest. Shelley, I won't burden you with having to to prognosticate your own product. Instead, let's go out. Let's go to Mr. Meatball. I think you were actually technically I was closer, so I'm going to go next. And let's see. I was at a 14.75.15. I kind of like that level again, but I don't want to step on you guys. That's why I like to go first. Yes, well, I didn't win, so I don't get to go first. So I'm going to give you guys a little bit more room on the upside here. I'm going to say I'll go right around to 14.5, kind of for both. With I'll say a 14.75 for the spikes. How about that? I'll do a nice quarter handle. I'll give you guys a nice half of a point or so on the upside. All right, Mr. Meatball, I bought you some time. What are you feeling for next week, sir?
Even today looked like they were the market was ready to rally. And then, Mark, I don't know if you saw this. Did you see who they cast for the next Batman?
Oh, the guy from Twilight, right?
Yeah,
you're going to crush VIX because of the Twilight
suck. It's that type of casting. They've gotten all of one grouping of Batman movies correct, and they only got 2 out of 3 of those. And it's just I don't know what to do. And what is their deal with British people? Superman's British, Batman's British, the other Batman's British. Pick a damn American, DC.
Yeah, there's no American left for Gotham. So all this is the long way around to what is your VIX prognostication, sir?
What did you guess?
You distracted yourself with your Batman rant. I was at a 14.5 on VIX Cash and 14.75 for spikes.
I'm gonna go. Based on all of the 14 put buying, I am gonna go 13.25 on VIX, 13.40 on spikes.
Wow, 13.25. Let's make sure I have that right. 13.25 on VIX, and what was the other one?
13.40.
13.40 on spikes. So there you have it, listeners. A surprisingly tight range from the Gelber group. They're with 7 cents apart there. I'm at a 14.5 on VIX Cash and a 14.75. Mr. Meatball going well to the south. 13.25 to 13.4. I wouldn't be averse if that were to come to pass, but we shall see. Unfortunately, that music means we come to the end of a very fun journey through the world of volatility. But before we go, let me go back around the horn. Let me start with my in-studio guests, guys, Brendan and Jimmy. First off, well done. You did an able job navigating the volatility waters. And if our listeners are intrigued, maybe they want to reach out to you guys about Tesla. I'm guessing they will. And as well as any other names they want to pick your brains, or maybe they want to come work for a fine group like yours. Where should they go? What should they do?
GelberGroup.com and check us out as a firm. There's always openings in every group, and we're always accepting resumes.
There you go. So if they want to come debate Tesla Vol with you, that they can come.
They can email me directly.
Yeah,
Heinz at GelberGroup.com.
There you go.
That's just JHEINZ.
Yeah, I like the ketchup, but not as rich.
That's for
like the ketchup.
Experienced and college hires, by the way. We have a training program as well.
Oh, so you have experienced guys, and also you'll just break them right out of school and remold them in the Gelber.
Yeah, I feel bad.
There we go. So check them out, and it's that. Oh, you're on Twitter as well, I believe, right? Is it at Gelber Group? Is that what it is?
I think so.
If we are,
we are unsure about that.
I was
probably
the handle, and they're at Gelber Group. Yes, GELBER.
There you go,
listeners. So check it out over there. And Shelly, you guys sound like you're cranking away with some interesting studies. What can we look forward to coming down the pike from you guys at MIAX in the coming weeks, sir?
We're like I said, we have the rule funds come in for next week. Our markets are tightening up, and we're very pleased. I want you to come visit our website, myxoptions.com/spikes, and everything you ever want to know about spikes, but we're afraid to ask.
Yeah, it's all right there. Check out the snazzy fun video over there while you're at it. myxoptions.com/spikes and trade it up. I know a lot of you did this week. Get out there, trade it more, and we'll talk about all that fun activity on the show. And last but not least, when he's not arguing about who they cast as Batman, he's hosting a fun volatility trader professional summit. This time earlier, within the next week. Our next show, Mark, it'll be done. Isn't that crazy?
Yeah, that's going to be nuts. I'm looking forward to. We're going to have to figure out our show schedule since Andrew's going to be here and me and you're going to be off and about doing all your fun eating my steaks type stuff.
That is very fun. That's my favorite part of the event.
Yeah, if you're in the Chicago area or you're going to be in Chicago next week, there's still time to register for our Option Pit event. I have like I said, I could squeeze maybe one person into my VIP summit, and then Thursday and Friday, the general audience, there's plenty of room.
There you go. Optionpit.com/events is the place to go. And you can also come in person and debate Batman casting. If you too want an American to be cast as Batman, come to the event and make your voice heard. And on behalf of Jimmy and Brendan and Shelly and the Greasy Meatball and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for sending in all your live questions and your after-the-fact questions and listening on demand. All the other fun stuff that you do, keep it coming. And we'll see you back here next week for more Volatility Views.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.